Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. There is so much going on in the world right now. We've got the impact of the US election, we've got rate cuts, not just here, but in the US as well. And then, of course, there's UK property as well. This truly is a bumper episode.
Welcome to the Property Podcast. Thank you for joining us. In case you don't know, we run a business that buys more than £100 million worth of property every year. You can find out about that at propertyhub.net/invest. But this is a podcast where we bring you some of what we've learned along the way for free, including keeping you up to date with everything that's going on in the news that you need to know about. And as Rob said, there is a lot of it.
This really is a bumper episode because there's so much happening in the world right now. Rob, where do we start? I suppose we have to start with the US election, because that's massive news. Because like it or not, it does impact us. And like or not, the victor, he does impact us. I would say, though, if you're looking at it from a purely investment point of view, then you could perceive Donald Trump's victory to be advantageous for your financial situation. And I only say that because the markets have interpreted it that way, at least early on. And that is the perception that Donald Trump was the better candidate for the economy. Now, you can argue all day to yourself, dear listener, whether it's the right choice for the world. But for the overall world economy, it's perceived, I'm not saying it is, it's perceived that Donald Trump was the better candidate. And if that is true, and the markets did well and asset prices did quite well last time Donald Trump was in power, if that is true, then the UK tends to benefit. And what do we have in the UK? Well, we have different assets, one of them houses, and then you can draw a long line from start to finish to say this may be beneficial for house prices in the medium to long term for UK property investors. But I think that's quite a long stretch. But generally, I think it's fair to say it's perceived to be a good thing for the UK economy.
Yeah, you're right. Loads you could say about this, and I've actually got a hub extra coming up that touches on this a bit more. But if we stay in our lane and stick to purely property, yeah, I think you could draw a pretty long and squiggly line to get to some impact on property specifically, maybe London or parts of London in particular. But in general, while that election is very consequential for the world in different ways, I don't think it's particularly consequential for UK property. Something that's more consequential for property from our perspective is rate cuts, and almost overshadowed by the election. We've had rate cuts on both sides of the pond as well over the last week or so. So the Bank of England and the Fed both cutting rates by 0.25%. We've actually got a YouTube video about what this likely means for the price of your mortgage. So if you're not already a subscriber to our YouTube channel, you can go over there and check that one out. But I thought it was interesting, Rob, that the Bank of England did choose to cut, especially because there are increased worries now about inflation and spending, and gilt yields have gone up as a result of the recent Labour budget. And there were some suggestions in their wording that maybe this would be the last cut of the year. Previously, people had thought that they would cut in December as well. But for now, at least, rates have come down further.
And we're in the fours, Rob. We're in the fours.
We're in the fours.
If 4.75 seems so much lower than 5, it does lift the spirit. And a nice early Christmas gift to us all. But you're right. The commentary around that rate cut suggests that that is it for now. And they want to see these inflationary pressures that exist right now, how much of an impact that will have, and holding firm for a few months, at least, I think. At least from the commentary, they're trying to manage our expectations, it seems. That's it now. So if we're ending in the year in the fours, it's not going to go up. Well, no promises, but it doesn't appear likely that it's going to go up before the end of the year. But certainly that's it for cuts. And we'll wait for the new year to see what happens. And with so much world news happening right now, it's understandable, Rob, that people haven't been talking about house prices a lot, at least on the front pages. But to all our dear listeners, that is a front page news story. And I say normally we start there, but there's been a lot going on. And once again, because they publish this stuff every month, we have more data to look at. And it's been a steady year upwards. And I think that is the story of the year. And we've got a lot of recap episodes to come up in the coming weeks as we get closer to Christmas and the end of the year. But it hasn't been a bumper rocket ship towards the end of the year. It's been very much slow and steady. And that's really reflected in all of the data that we have this month.
Yes, so we've got asking price data from Rightmove, which is interesting because that's not prices paid, but it is a leading indicator. And that shows an increase in October of 0.3%, but that's smaller than usual for this time of year. Normally in October, people are feeling positive and going bigger with their asking prices. Then Nationwide, which is based on actual sold prices at the point of having a mortgage offer agreed, so a bit later in the process, that also shows a very small monthly increase, just 0.1%, putting us on an annual rate of change of 2.4%. The outlier, Rob, is Halifax. Halifax, same thing, a small monthly change of just 0.2%. But the difference is that according to Nationwide, we're still something like 2% below the house price peak, which is in the summer of 22. But according to Halifax, this month's small increase has now taken property prices to an all-time high. We're above the previous peak if you listen to Halifax data. Obviously, after adjusting for inflation, you're not, whichever set of data you use. But Rob, if all this stuff wasn't going on in the world and you needed a front page for your newspaper, you'd go with the Halifax data. House prices all-time high.
Yeah, and Rob, most people don't account for inflation, so we bang on about it a lot on the podcast. In nominal terms, yes, property is at an all-time high, and that's where most people stop. But for those people who've listened to our episodes, particularly on the silent property crash, highly recommend that you go back and listen to those episodes. We'll link to them in the show notes. You'll understand looking at it in nominal terms is pretty limited, and looking at it in real terms, which is taking into account inflation, is the way to really assess the property market. So if some of that is sounding a little alien to you, make sure you go and listen to those podcasts that are listed in the show notes below. Rob, we've done house prices, so naturally we need to move on to rents. And rents have continued to rise. And the story of this year so far has been rents going up very slowly, and in fact at a slower rate than before, because over the last couple of years we've had some bonkers levels of growth, double digit at times. At the moment, the annual rate is 5.2, which is the slowest for a number of years. But what's interesting here, and it could be just a blip, but I think it's worth commentating on, if you look at the quarterly data, the pace of increase picked up in the third quarter compared to the second quarter. And that's the first time that's happened in a long time, because it's been slowing every single quarter, the rate of growth. But this quarter, it picked up a notch. It could be just an anomaly. It could be a one-quarter trend. But I think it's worth noting.
It is, because for years we've been seeing these chunky annual changes, but that's been coming down as previous quarters have dropped out of the data and been replaced with more moderate quarters. As you say, last quarter, that's not the case. It's ticking up again. So I don't think we're going to see rents going back to the double digits that we had a couple of years ago. And I hope we don't, because it's far better to have stability in the market. It's possible, of course, that when all the renters reform stuff comes in, that'll produce a one-off increase in rents. And lots of adjustments happen around that, especially the fact that you can't accept offers over the asking rent. So there's going to be a temptation to put up the asking rent so you can accept offers up to it. But putting that aside, I can't see us going back to anything like where we were. But this last quarter does suggest that rental growth is going to continue to comfortably outpace inflation, as it has done for the last little while. But you're quite right, Rob, to say that is just one quarter. So we'll have to wait and see.
Mortgages now, and Rob has already said we've got a great video on the impact of rate cuts that you should be watching on our YouTube channel. Search Property Hub UK. Also, it'll be linked to the show notes again. But it's just worth saying the headline is that new rates haven't fallen because it was already priced into the market. So great news for those who've got tracker mortgages and your mortgages now come down because of that drop. Fixed rate mortgages, obviously no impact there. But the new market, the market for people taking out mortgages, as it stands, as we record it today, no real change. Want to understand more? Well, make sure you go and watch that video on YouTube.
Quick word now on leasehold reform, or rather a lack of leasehold reform. Because we know from the questions that we get in for our Sunday Times column and for Ask Rob and Rob that a lot of people are waiting for leasehold reform. They're holding off on extending leases, waiting to see what's going to happen. And to those people, the message basically seems to be, don't hold your breath. There's a piece in the Telegraph saying leasehold reforms could take 5 years, Labour MP admits. If you read the article, that turns out not to be quite true. What he actually said was that ending leasehold was a whole of Parliament commitment. But ending leasehold goes further than the actual leasehold reform bill that was passed over the summer in the final days of Parliament. That was not getting rid of leasehold, but it was making various changes to how long you could extend your lease for, how much it cost, and all that kind of thing. He hasn't said that that's going to take the whole of the Parliament, but he has basically said, well, it's complicated, you need to pass all this legislation, we've got some stuff to do. So having previously pledged to get this done within 100 days, Now it seems like it's going to take a fair bit longer. But I would say that even ahead of that happening, the good news for leaseholders is firstly that it's going to happen at some point. There is absolutely no way, as definitively as you can say anything about anything, that these leasehold reforms aren't going to happen at some point. But also through the sheer fact that it is going to happen and everyone knows it's going to happen, lots of the more dubious practices that were a feature of leasehold in some situations, not most, but some, have stopped anyway, as freeholders have realised that they can't try their luck anymore. So there'll certainly be people disappointed by the news that these reforms are going to take longer, but they will happen in the end.
And finally, we could have had actually multiple stories on council licensing this month, but we decided to highlight the wonderful work of Newham Council. Now, of course, we, and nearly every other property investor, are not a fan of the licensing that these councils bring in, mainly because they don't seem to do anything for the money they collect. And Newham Council not only seem to do anything with the money they collect for the licences that they insist all private landlords have, but they don't seem to do anything with their own properties as well, because it's been found that they have serious failings in its own properties. An astonishing 40% of council homes haven't had their electrical test for more than 11 years. And there are just 8,000 fire safety issues that are more than a year overdue. Now, Newham Council, I'm sure, would take a very dim view if you hadn't done an electrical test for over 11 years or weren't fixing your fire safety issues. Yet it seems acceptable that they are the organisation moderating the licensing agreements to make sure we all are up to the standards that we need to be, yet they can't manage their own properties. I'll leave you to decide what words you'd like to use to describe that situation.
It's enough to make you a bit angry, but we won't get angry. We will move on. That's it for this month's news. But if you want to be kept up with the news every single week for free, then sign up for the Property Pulse email, which drop into your inbox every Friday morning. You can sign up for that at propertyhub.net/pulse. And before we end the show, we'll bring you a little bit more in the form of Hub Extra. And in the light of the US election, I thought it would be interesting to talk about prediction markets. There are a few of these that have become well known as a result of the election, but probably the best known is Polymarket, polymarket.com. And a prediction market is basically kind of like the name sounds. You can go and place money on the outcome of an event based on the probability of it happening. And the idea is, because it works differently from a betting site, where the odds are largely set by supply and demand rather than people attaching actual probabilities to things, then the predictions made by these markets turn out to be more accurate. So I'm not bringing this up suggesting that everyone goes and speculates on the outcome of future events, but it can be interesting to go and check in on what these markets believe will happen. So on Polymarket, for example, they had Trump at well above a 50% chance of winning ever since the beginning of October, at a time when he would have struggled to get that view from anywhere else. But it goes beyond just politics. You can go and see that apparently there is a 36% chance of Bitcoin going above $90,000 in November. And Rob, most importantly for you, I know, there is a 42% chance of Liverpool winning the Premier League, making them the favourites.
Oh, what a way to end the podcast, Rob. That's made my day. I've never heard of this, but I like that. 42%, that's not bad. That's not bad. I'll take that for where we are in the season so far, which has been very enjoyable to watch. Let me stop. I'm on the verge of going into all out why I love Arne Slot, but let's hold back. That's a really cool tool. Thank you for sharing it, Rob. I hadn't heard of it, and I have no doubt I'll be losing a bit of time later today looking at it in more detail. Again, we'll link to it in the show notes. Loads in the show notes today, so make sure you go and check that out. And make sure you check out the Sunday Times. Guess what? On Sunday, yep, our smiling faces will be in there answering more of your questions. And then we'll be back on Tuesday answering even more questions with Ask Rob and Rob. And of course, we'll be here, same time, same place next week with the Property Podcast. So until then, take care. Have fun. Bye-bye.
Bye-bye.